Hi everyone, good morning. Thank you very much, ma'am. Before giving my introduction to you all, I would like to thank AAFM for giving us this wonderful platform. And I would like to add my warm welcome to all elite members and partners for taking time out for this busy schedule. Hi, I myself Sachiin Sharma, Marketing Head of Emo DAO, Southeast Asia region. I want to begin this morning. First and foremost question you must have in your mind actually. What is basically emo DAO and what is it for? DAO basically means, it's a jargon word actually. It means decentralized autonomous organization, which is a part of emo network, which is an emerging cryptocurrency on blockchain network. Now again a question rises, like why a kind of technology we are here in this forum? Actually, my love affair with this cryptocurrency and blockchain technology began way back in 2015. And after learning about this technology, I truly believe this technology can transform the financial industry in the near future. We came across, like, if we try to understand what is actually is money, we come across a lot of new technology every day that changes the behavior. But once in a while, we come across something that changes the whole, which changes everything actually. Today, we are talking about one of such mega change, which is the talk of the town, and everyone is eager to know about this change in our money. Now, we should understand why it is important for us to understand this change. Those who anticipated the changes brought by the industrial revolution and the information and technology revolution were able to tremendously benefit from it at that time. Similarly, who can anticipate this particular change can take benefit from it and at the most take control of the most important and hardened thing you have, actually your money. First thing, we have to understand, why do we actually need money? Um, in simple words, we need money for one and only one thing: to solve the problem of barter. Money is therefore there to solve the problem that society faces on day-to-day basis. Currency, if we try to understand the definition of currency, it is something which has value and can be traded. So the currency has to be durable, it has to be portable, and it has to be divisible. Next, why the currency is evolving time to time, how the currency is evolving actually. With changing times comes new and improved method of trade, along with new forms of payments. First thing, what society of the people started, actually, I'll try to go something in history actually. First, what society of the people started using was day-to-day utility or commodity actually, like grains or kettles. Whatever was available in the market, in the nature, but was little scarce, not the one which was available in abundance like sand or rock. It has to be precious, it has to be rare. But this community was difficult to use this as money. Problem was durability. Grains could get spoiled, kettle could die, there goes your money. Problem was with portability. It was difficult to move from one place to another. Problem was there with divisibility also. If you are trading with the cattle, you want to do a smaller transaction, you can understand the challenges you might face at that time. After this, once the history moves again ahead, after the society started using precious metals like gold and silver for trading, and it emerged as the global currency. It was rare and was better than the other currency before the society was using actually. They were more durable, more portable than before, and more easily available. Divisible, sorry. You just have to heat the precious metal, make it liquid, and break it into parts, and you can use as a smaller transaction. Then the society started moving towards paper currency. Now, this was the time we came into paper currency. Started depositing gold to goldsmiths just to prevent theft. The goldsmith become bankers and started issuing paper receipts. That's how paper currency notes were born. Over a period of time, people, rather than exchanging Gold started exchanging these receipts as they found it more convenient. It solves the problem of durability, portability, and divisibility. This kind of money, which people were using at that time, it was around 1918, as the experts used to say, backed by gold standards. What happened past 100 years, actually, country after country, nation after nation exited the gold standards. Money that we use now, actually, what we are using now, as per the experts, it is called as the fiat money. Fiat means it shall be something which does not have any intrinsic value or anything which is not backed by any asset. The reason it has value because some central authority say so, and we as a society started accepting that particular thing. There is always scope of improvement. Over a period of time, we are trading money electronically, increasing global citizens as we use this global information through internet. But our currencies are still national in nature. Money that we use in fiat money, I was discussing before, is acceptable to the hyperinflation actually. Fiat money is basically unlimited in supply and free to create. It is created by government of the nation or central authorities by their monetary policies. But once in a while, sometimes for good reasons, sometimes for bad reasons, government need to create a lot of money. Maybe actually once a note are printed, maybe to fund a war or to kickstart the economy from a depression, or sometimes elections are coming for populist reasons. When that happens, no fault of ours, my existing money actually loses its value. That's what called is inflation, when the prices of the goods and services tends to increase. In the past 100 years, 55 cases of hyperinflation have been raised just because of this fiat currency. Technology is changing the world around us, and it is changing on a very fast pace, and we must change along with it. Actually, our traditional banking systems are not processing at the same pace as consumer needs. We need a new financial system which has to be safe, secure, fast, peer-to-peer, transparent, and distributed. That's how cryptocurrency came into existence actually. Cryptocurrency is a medium of exchange using blockchain technology. It was created for the purpose of making global transactions that are private, safe, peer-to-peer, and anonymous. It uses cryptography to secure transactions and to control the creation of the additional unit of currency. It is made, it is not made or controlled by any central authority or institution, thus making it immune to government interference and manipulation. If we try to understand the basic features of cryptocurrency, it is created or stored electronically using encrypted codes. Digital or internet-based currency can be sent to anyone, anywhere, anytime. Bitcoin was the first currency that was introduced in 2009. It is globally accepted. It is decentralized, impossible to forge or hack, actually. Asset value, easy liquidity, and faster transaction. Cryptocurrency basically works on blockchain technology. If we try to understand blockchain, blockchain is one of the leading innovations in the finance industry, actually, holding promise to reduce frauds, ensure quick and secure transactions and trades, and ultimately help manage risk within the interconnected global financial system. Blockchain accomplishes this through advanced cryptography that is designed to resistant to hacking, adding trust to the transactions ecosystem. Blockchain is nothing but it is a digital collections of transactions that are tracked and recorded in a decentralized network. It is a distributed ledger, which means there is no central authority of the network or no one person or entity in control with the ability to corrupt the network. The blockchain comprises individual blocks of data, each containing a record of information that are linked together in chronological order. These links cannot be changed, which is what instills confidence in the network. This revolutionary technology manages transactions of information by securing them as they occur. The purpose of the blockchain is to lower the cost of the transactions and make them more efficient and faster. The technology this technology has many applications that can be integrated into different industries actually, not in the financial industry only, providing investors with many opportunities. For the beginners, for the starters, it is one of the technological underpinnings of cryptocurrencies like Bitcoin, Ethereum, emocoin, and many more. One industry with clear application for the blockchain is financial services, where companies are in perpetual race to reduce the cost and friction of the transactions. Few benefits of the blockchain, if we try to understand as per the financial services, one is improving transparency. Blockchain can make the financial industry more transparent since users are performing activity on a public ledger. This transparency can expose inefficiencies like frauds, leading to the problem solvings that could reduce the risk for financial institutions. Adding securities, as consumers become increasingly active online, the digital universe is breeding ground for the scammers actually. With blockchain technology, this concern could be reduced. Payments and money transfers made on the blockchains are more traceable than in the traditional banking systems. When information goes through different financial intermediaries, there is a risk of interceptions of that information, raising the possibility of frauds. This whole is an oversight can be filled with the blockchain cryptographic algorithm that brings security in exchange of information between the parties actually. It can lower the cost, what we discussed before. This innovation can be good for consumers because investors are getting more for their money and they're getting a balance between automation of financial services and a lower cost. This ultimately benefits everyday investors who looks to cut expenses while accessing this new financial services environment. I would like to the crypto's continuing momentum actually, whatever is happening, the continuing momentum in cryptocurrency is clear from the pace of the investment by institutional investors, venture capital firms, and private equity funds. First, basically investors are responding to the general professionalism of the cryptocurrency industry. The growth in average capital invested per deal is an indicator for this. Second, new investments are available. These includes recently introduced startups, currencies, such as the initial coin of offering, what we call ICO in short form, that are something used to launch new ventures and treatment of which varies considerably from jurisdiction to jurisdiction. They also include liquidity funds with the venture capital features, highly liquid hedge funds, and based markets investment opportunities. Because regulators and large retail banks have gotten involved, these options are seen as safer and they are in a few years ago. Third factor is increasingly familiar with other blockchain applications like smart contracts, settlement processes, and some investments vehicles for capital markets. Finally, because the gains and losses in this asset class do not always correlate with the stock market, crypto investment is sometimes seen as a diversifying play. A more established market structural for institutional trade in cryptocurrencies is thus beginning to take shape. Other than some investors, most of the companies involved in cryptocurrencies tend to be young, less than 2 or 3 years old, but many will participate in the digital ecosystem just emerging now. That will most likely facilitate cryptocurrencies related activity in the future. Before ending this session, I would like to inform you that we will meet tomorrow and try to understand how adaptation of this digital currencies is changing our day-to-day lives. Thank you very much.
Thank you so much, Sachiin sir. I would say this is the most demanded topic of today. So I think we can have a full 2-day event specifically on this topic, barring all other topics, which are definitely a very important part of the wealth management industry. Cryptocurrency is something which people do not have much knowledge about, but it excites everyone The moment we hear digital currency, I think we all get excited. We are flooded with questions, sir, but time is limited. I would still like to take a few questions because people are really putting in a lot of questions to know more. Sir, is it legal for me to purchase cryptocurrency in India?
Yes, government has just imposed a cryptocurrency tax. Actually, now they are charging 30% on your profits or whatever you do trades on cryptocurrencies. So it is not regulated yet. The regulations are still yet to come. But still, yes, you can trade with cryptocurrencies, and whatever the profits you are making through it, you can pay your taxes along with it.
Okay, which is fair enough.
Yeah.
Are blockchains and cryptocurrencies the same, sir?
No, actually blockchain is a technology. It is a technology, and just cryptocurrency is just a part of it. And to verify the transactions, you just have to use this technology, and you can create some other smart contracts, and other industries can also come into it, like retail sectors, shopping sector. All these sectors can also come into the real estate sectors, can come into the blockchain technology on later part. Just the financial sector is on currently on the blockchain technology.
Sir, something very generic question, but I would still like you to please take it up. Can I encash crypto to rupees?
Yes, you can definitely.
People are asking, can I buy my home or car by crypto?
Yes, you not currently in India, but countries like Dubai, countries like Philippines, countries like El Salvador, like some of the cities in Switzerland, where it is used as a legal tender or as a currency, like Japan, Australia, Singapore. You can buy product from that also.
Okay, sir. So many have the perception of money laundering using cryptocurrency transaction. Is it myth or a reality? Please help.
There might be some issues, like it is a global currency, we cannot stop the transactions. But yes, if governments can come into the regulations and everything can be tracked, it is a transparent transactions. Transaction can be tracked through blockchain technology. So yes, it could lead to money laundering on some cases. That why we do some AML activities or something like that.
Okay. So last question. I am not able to take up question because of time paucity that we have. And we also, sorry, interrupted you in between while we were so engrossed in your discussion, because it's, again, I'm repeating, one of the most demanded topics of today. Is cryptocurrency more suited as a part of short-term portfolio, or can it be considered as a long-term portfolio?
It can be considered as a long-term portfolio. We should never go for a short-term actually with the cryptocurrency.
So that is the whole objective of investments, having a long-term vision, I guess. So this sums up well.
Yes, technology is always a long-term vision actually.
Right.